Welcome to the Real Estate Guys radio program. As real estate investors, we have to look at broader picture economics and consider more than just the real estate markets. Today, we'll talk to two legendary investors and find out where we are and where we may be headed. It's Jim Rogers and Peter Schiff today on the Real Estate Guys radio program. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable for their achievement. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2019 Goals Retreat, January 18th to 20th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the hundreds of people that have attended. Find out more at realestateguysradio.com under events or call 888-489-7723 extension 18. Get your life back on track, physically, spiritually, and financially. Attend the 2019 Goals Retreat on the third weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today. Welcome to the Real Estate Guys radio program, live from Las Vegas, Nevada this week. Let's say hello to our co-host, financial strategist, Russell Gray.
Hey, Robert.
This is our annual pilgrimage to Freedom Fest, which is an interesting conference of all kinds of topics and ideas and speakers. And there's politics, and we're not political guys, but that's always interesting to watch. And there's these forward-thinking folks, and then there's the conspiracy people. And we went to this event first time because it was recommended to us by a gentleman I follow and has done a lot of legal work and talking about different jurisdictions, and said, hey, I'm going to be at this event, and I never met him, so we went to the event, got to meet him, had him on the radio, and the event was amazing. And you know, the real estate guys travel around and we go to lots of events, but we don't go to the same event every year because there's just not enough weeks in the year.
Yeah.
But this is an event that we are at pretty much every year, and it's awesome to see this crazy collection of different mindsets and ideas.
Well, it's great. You know, it's really interesting, too, because the entire time we were going, it was during the Obama administration. And so there was a certain political atmosphere. And, this tends to be a little right-leaning. So there was a lot of opposition or resistance or criticism. Now we're in the Trump administration. We actually had a chance to interview Donald Trump at Freedom Fest a couple of years back when he was candidate Trump. The promoter of this event, Mark Skousen, is not afraid of controversy, not afraid to take a position. And sometimes, you wonder, well, what are you guys doing there? But one of the things we've learned from Peter Schiff is that economics and politics really are kind of intertwined. And so sometimes on this show, we have to walk a little bit of a fine line because we're talking about the ramifications of policies on economics and investing. And sometimes we're dealing with policies that we disagree with, but we have to look at the reality of what those policies are creating, whether you agree with them or not, whether you like them or not. It's the reality, and it affects the economic environment that you're investing in. Everything from monetary policy with the Fed, should they be raising interest rates or should they not be raising interest rates? Or you could talk about eminent domain. You could talk about environmental issues and restrictions and land development, water rights use. I mean, there's a lot of things that come up here, things that you don't normally think about, kind of as a Main Street real estate investor, especially if you're a typical Main Street investor, you're kind of myopic. You're looking at the property, you're looking at the neighborhood. Maybe if you're a big thinker, you're thinking about the market. A lot of times real estate investors just pick the market they happen to live in and just look for a good neighborhood and a good deal. And that's the extent of their macro thinking. We tend to go a lot higher than that. After 2008, we had some experiences that taught us there's things that happened up in the stratosphere of the economic world that roll down onto Main Street from time to time, and we decided it would be a good idea to start paying more attention to those. And that's been a big part of our loyalty to coming to both to Freedom Fest and to the New Orleans Investment Conference. It's also affected the way we've been structuring our Investor Summit at Sea for the last 8 years, because it's really become a summit where you get together with the big thinkers and you think about things when you're standing on top of the mountain looking over instead of down in the weeds. So, it's for those reasons and many more that we bring these types of shows to you and these episodes and these voices, because these are a lot of the voices that you don't get to hear on mainstream financial media. And I think that even though, some people say, well, they're a little dark, they're a little gloomy. I mean, we can talk a little bit about that. But at the end of the day, Robert Kiyosaki's taught us you got to stand on the edge of the coin. You got to look at both sides. And sometimes, there's things that people who have concerns about what's going on in the world, you got to listen to what they have to say and balance that out against all the opportunity.
One of the things we appreciate about Mark Skousen is, like you say, he's not shy of a controversy, but at the same time, what he does foster here are lots of debates. There are several sessions where a topic or an ideology will be debated. In fact, one of the things they do every year is a mock trial where they bring in witnesses and they have the prosecution and the defense, and Kennedy is the judge. Lisa Kennedy, she's so funny. And they put something on trial, right? They put religion on trial, they put police on trial, they put the education system on trial. And it's fascinating because you're forced to listen to both sides of the argument. And that's, something we've really gleaned from Kiyosaki. If you haven't heard last week's show with Robert, he came out for Freedom Fest at our invitation, and we had an amazing time hanging out with Robert as always. But, he's got this concept of standing on the edge of the coin, two sides to every issue. You have to discipline yourself to stand on the edge. So I think that's a good tee up for today's show, because we've got two guests who have earned the right to have an opinion. Both brilliant guys, both successful investors, both worth a lot of money, both have made lots of people hundreds of millions of dollars. So these guys have earned the right to have an opinion. But to your point, Russ, their opinion may seem kind of doom and gloomy. Now, the real estate guys, we're pretty optimistic guys. I mean, we're always about finding the opportunity. We know that no matter what's happening in the market, there is a great opportunity. We know you can find a killer deal no matter what the rest of the world is saying. But because of that, and in spite of that, we need to get around people that think the other way. If you're too Pollyanna, then you need to get around some doom and gloom. If you're too doom and gloomy, then you need to get around some optimistic folks.
Yeah.
And so today's show, we're going to hear from two gentlemen who have been on the show before, but it's always good to check in with them and see what their minds are all about.
Yeah, so I think one thing I'd like to say on that is, I've spent some time trying to explain to people the value of our video series, Future of Money and Wealth. And we're doing it against the backdrop of all kinds of fabulous economic news coming out. You hear the unemployment rate has dropped. You look at the GDP growth. You look at how the manufacturing jobs are coming back and the optimism at the consumer level and at the small business level. You think, oh my goodness gracious, it's just sunshine and unicorns for as far as the eye can see. And that's true. There's a lot of things to be excited about. What I've had to do is really break it down and understand there's what the economy is doing, and then there's the strength or fragility of the economic system or the financial system underneath the economy. I look at it like this. If you're driving down the highway and you're going, 75 miles an hour and you're on your way to a very exciting destination, let's say it's financial independence or your retirement or whatever your dream for your investing is, and you look at your speedometer and you're like, I'm doing 75 miles an hour. I'm doing great. But you're not looking at your temperature gauge or your oil gauge. And what you don't recognize is that your engine, your system is starting to break down, even though the car's going along nicely and everything's on pace. And this is the dichotomy between the economic numbers and then the financial system. And so hanging around with guys like our guests today and the people that we had at Future of Money and Wealth, again, voices that you don't often get to hear. In fact, you almost never hear in mainstream financial media because they don't fit the narrative. It's all about Wall Street and all about stocks and all about sunshine and how the world is going to go up in value and you should invest, buy low, sell high. There's a whole philosophy that the mainstream financial media has bought into, promotes, and gets paid to advertise, quite candidly. And so these guys just don't fit that narrative. Now, to your point, Robert, it doesn't mean we shouldn't listen to them. In fact, we should. Now, here's the other part of it. The flip side of every problem is an opportunity. After 2008, and I've been very candid about this on this show, I got crushed. I got wiped out in 2008. And one of the things that I discovered in that was that it wasn't the external circumstances. For the first probably year or so, it was really all about, 2008 wiped me out. It was, the economy and blah, blah, blah. But you know what? Then as I began to kind of study it after the fact, I found all kinds of people that actually became quite wealthy and did very well through the financial crisis. So I was going, okay, let's see. We both went through the exact same circumstances, and that guy did great and I didn't do great. So it's obviously something I did or didn't do that I could have done, and I can't go back and recapture the past, but what I can do is make dang sure I get the lesson and go forward. And part of that lesson has been spending a lot more time listening to guys that see a bigger picture than I saw going into 2008.
One of the guys that appears on our Future of Money and Wealth video series is Dr. Doug Duncan, the chief economist for Fannie Mae, and he was extraordinary. One of the things he said back in April was, we are in the second longest recovery. We are now past, and we are in the longest single recovery ever. So if you know that things that go up must come down, if you know that everything works in cycles, then at some point there's going to be a downturn.
And that day is getting closer every day now.
So our message today isn't, oh my gosh, run and hide and bury yourself in the mattress. Our message today is make hay while the sun is shining, but prepare. And that's the big key. Our two guests today have definitely strong opinions about this. Before we're done, we're going to hear from our good friend and gentleman that joins us every year on the Investor Summit at Sea, Peter Schiff. But before that, one of the world's greatest investors. When we come back, we'll talk to Jim Rogers on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
This portion of the Real Estate Guys radio program is brought to you by International Coffee Farms, where you can own a parcel of land in your very own specialty coffee farm in Panama for as little as $15,000. Here's how it works. Deeded half-acre parcels entitled Specialty Coffee Farms in Boquete, Panama are turnkey managed professionally on your behalf by a team of local experts. Sustainable average income is estimated at 12%, and cash flow can begin within 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm is committed to a socially sustainable fund to improve the lives of the Panamanian coffee farm workers and their families. International Coffee Farms currently owns and operates 9 specialty coffee farms with half-acre parcels available for immediate ownership. To find out how you can become a coffee farm owner in Boquete, Panama, email coffee@realestateguysradio.com. That's coffee@realestateguysradio.com.
If you want to retire in the next 5 years or less through real estate, then please pay close attention. My name is Brad Sumrock, and I've taught thousands of my students how to replace their incomes, quit their jobs, and retire faster than they ever thought possible by not investing in single-family homes. You see, there's a secret to retiring fast with little risk, and it has nothing to do with being a landlord, fixing toilets, or flipping houses. The secret is multi-family apartment buildings. Starting from scratch with zero experience, I managed to pocket over $1 million in cash and retire from my 17-year corporate job within 3 years of apartment investing. Now, this is not your typical no money down real estate training. We believe in smart, hard work for intelligent people. So if you're good with your finances, have a decent job, or saving your money, and you're looking for a change and getting out of the rat race, then investing in apartment buildings might just be the answer you've been looking for. Send an email right now to sumrock@realestateguysradio.com to get the details of my upcoming training event, and you'll also receive my free training webinar, Apartment Investing for Beginners. That's Sumrock, SUMROK, @realestateguysradio.com.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Now in our 21st year of broadcast, we're in Las Vegas, Nevada at Freedom Fest. Let's say hello to legendary investor and all-around great guy, Mr. Jim Rogers. How are you?
Thank you, Robert, but I'm not a legendary anything.
Oh, I don't know about that. A lot of people would argue, and you've, of course, written many, many books, done amazingly well in investing, and the world is changing. Before we get into the kind of the current state, if you would, because I know you have some opinions on that, let's talk about some of the disciplines it takes to be an investor in changing times.
First, you have to be open to change because the world is always changing. And if you want to be successful in anything, you have to realize that the world is changing. And if you can anticipate and figure it out, you're probably going to have a lot of fun.
Well, and it does take some work to figure out where things are going.
That's exactly right. I wish it were easy. I wish it was easy to get rich. We'd all be rich.
Yeah. So today, people are looking at the cycle, and we're long in the tooth and all of that. I know you've spoken quite a bit about what the next downward trend might look at, but what are some of the things people can do to be prepared for the change that is coming?
Well, the worst thing you can do is listen to other people, including me. If you want to be successful and survive the coming problems, you're going to have to stay just with what you yourself know. Don't listen to somebody else. Maybe they could listen to you, Robert, but don't listen to anybody else on the radio, because if you start doing what other people say, first of all, they may be wrong. They may make mistakes, and if you get trapped in something where you don't know what you're doing, you're going to lose a lot of money. So stay with what you know, no matter what it is, no matter how simple it is, stay with what you know, and that's where you start, and build from there.
Good stuff. Now, being through a lot of different cycles in a lot of markets, you've seen ups and downs and all of that. What are some of the signs you'll look for when there is, blood in the water or there's change on the horizon?
Well, when people are getting exuberant, you should be very worried. When people say things like, oh, it's different this time, those are very dangerous words, so be very, very careful. When everybody's enthusiastic, that means somebody's not thinking.
Now, you've written a couple of amazing books and, of course, done well with that. But I wanted to ask you specifically about this book you wrote, A Gift to My Children, because this was a way for you to, give some of those great nuggets of experience that you've built up over all these years as an investor and in life, really.
Well, I didn't want to have children. I thought children were a waste of time for many years, and I finally had children. I found out I was wrong about children. They're wonderful. They're a lot of fun. But I remember I would always think of things I want to make sure I teach my daughter that. So then I started writing them down, and the next thing I knew, I had a book, you know. And I've recently rewritten the book. I've updated the book, so it's maybe I'm getting better and better. But like as you point out, most of these things that are not really for children, they're for grown-ups, because my 8-year-old's not going to understand what I'm talking about until she's 28 or 30.
Not yet. Right.
So someday she'll understand. That's why I wrote them all down.
Now, what do your daughters think about, what their dad does and all that kind of stuff? Or they have any interest?
I've not tried to teach them about investing because I have learned in life that until somebody wants to do something, you're wasting your time. I mean, you can take a horse to water, but you can't make him drink. I'm not the first to know that. So I'm waiting for my children, if they ever come to me and say, tell us about investing, then I'm going to do it.
Now, one of the things we've been talking about is kind of what the future looks like for money and wealth. And what do you think about the alternative currencies, cryptocurrency, that kind of stuff? What are your thoughts there?
Well, blockchain is going to change everything we know. It's very, very exciting. Most cryptocurrencies, probably all, will disappear. I've never bought any, so maybe it's sour grapes, but I'm sure they're going to disappear.
Well, but your point about the blockchain technology, there's just a lot more than cryptocurrency there, right?
That is extremely dramatic, the blockchain. Yes, that is going to put a lot of people out of business. Technology's always done that. Electricity put a lot of people out of business, but it also made a lot of people's businesses. So yes, it's going to change everything we know, but don't worry.
Now, speaking of don't worry, one of the things that you've often talked about is the fact that in a reset, in a downturn, there are certainly problems and trouble, but sometimes we have to go through that. That's exactly what has to happen for us to get to the next upturn.
Well, forest fires are pretty horrible, but they clean out the underbrush. They get rid of the dead wood, and then the forest can grow even better. So, yes, forest fires are horrible, but they're also good in the end. The Chinese actually have a word called Wei Ji, and what Wei Ji means is opportunity and disaster are the same thing. Catastrophe and opportunity are, together.
So true. Now, of course, as the real estate guys, got to talk a little about real estate. I know you're a big proponent of agriculture, which is one of the areas of real estate we've really focused on in the last couple of years. What are your thoughts there?
I'm a farmer. The next few years, the farmers are going to make a lot of money and be very rich. So if you're not happy living in the city and you like the countryside, think about becoming a farmer.
There you go.
I'm not going to do it because I wouldn't be any good at it, but people who are good at outdoors should think about farming.
Okay, that's good advice there. Now, you picked up and you decided to move to the other side of the world. Talk about that. Well, you saw opportunity and off you went.
China's going to be the next great country in the world. I mean, that's becoming fairly obvious to some people. So I wanted my children to know Asia, but more important, I wanted them to speak Mandarin. And so I tried doing it in New York, but I realized if I were really serious, I was going to have to take her to a place where she had to speak Mandarin. Well, it's worked. It's worked beyond my dreams and expectations, actually.
Well, it's been awesome to have you back on the show. Always good to hear from you. And luckily, the folks here are going to have a couple more opportunities to hear you speak, and we can't wait to hear you as well.
My pleasure, Adam.
All right, thanks, Jim.
Thank you.
And that's Jim Rogers. You turn to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Homebuyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the Perpetual Wealth Strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Hi, this is Chris Martinson, author of Prosper, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program in our 21st year of broadcast. We're in Las Vegas, Nevada at Freedom Fest, our 8th year attending this conference, and the gentleman you're about to meet has been here more than we have. Let's say hello to our good friend Peter Schiff. How are you?
I am doing good. I've actually been, I think, at every Freedom Fest save one.
Yeah.
And that was when, I think it was the birth of my son, or it was my daughter. I can't remember. Maybe Lauren would know, but I know the birthday. So my son was born on July 8th.
There you go.
And so it was right around Freedom Fest, and so I couldn't go that year because it was right around the due date. But I was here for the very first one, and I'm pretty sure I haven't missed any other than that one.
You know, we've had the pleasure of having you join us for the Investor Summit now 6 years in a row, and we first met here at Freedom Fest, so it's kind of like old home week this week for us. And, back then, it was just after the crash, and leading up to the housing crash and all of that nightmare, everyone thought it was great, the economy's great, everything's full speed, and you were the voice of reason out there saying, guys, pay attention to this. Here we are again. The economy's great. Everything's good. Jobs are great. Where are we, man?
The big difference is the economy is not great. Everybody just thinks it is. Everybody's talking about how great it is, but the numbers don't even validate it. At least back, during the housing bubble days, there were some phony numbers to support the idea that everything was great. We don't even have those phony numbers now. We just have faith that those phony numbers are going to get better. But what I was saying back during the days of the housing bubble was that even though we think the economy is good because everybody is getting rich because their house is appreciating and there's all this consumption and spending, I knew that it was phony because I knew it was all based on a bubble and that eventually the bubble would pop, and as the air came out, there would go the economy, and as real estate prices imploded and as the lenders had to eat their losses, and then you had a financial crisis, that we were in for a rude awakening and a devastating recession. But the bubble that we have now hasn't even delivered the phony gain to a large number of people. I mean, you do have some people at the very top whose stock portfolios have gone up and, who are benefiting from what's going on. But the vast majority of people have been left behind. That's why Trump was elected. That's why he was able to get so many Democrats to vote for him, because they were disappointed in Obama, because he failed to deliver on his promise. He didn't change anything. And so Trump came in, and he was very different from the typical Republican, and a lot of people took a shot at him. But those voters' lives have not improved as a result of Trump being president. I mean, so it's just betting on something that isn't going to happen.
Now, today you talked about the return of stagflation, and I don't know, we probably have some listeners that don't even remember stagflation, but take us through what that means and why you think stagflation might be in our future.
Yeah, well, they actually coined the term, I think, as a result of experiencing it, because when it happened, everybody was caught off guard because nobody believed it was possible. I mean, back in the 1970s, the school of thought that dominated was Keynesianism, and Keynesianism came into vogue during the Great Depression. One of the tenets of Keynesianism is that it's low unemployment that causes inflation. It's like economic growth is why you have inflation, and when the economy is weak and there's higher unemployment, that you have low inflation. So the idea that you can have a weak economy with rising unemployment and rising inflation at the same time, to them seemed like that's impossible, especially given the Keynesian remedies for what to do, right? Because if unemployment is high, then you create more money, right? You lower interest rates, you run deficits to try to stimulate the economy. But if inflation is high, you tighten monetary policy to try to rein in inflation. So those are the opposite policies. So what do you do if you have inflation and recession or unemployment at the same time, right? Which dragon do you try to slay? Because you obviously can't do them both if you have the opposite policy for each. So this, nobody could understand. This is, of course, Keynesianism is a bunch of nonsense. That's why, in fact, historically, you have the most inflation during periods of economic weakness and unemployment. Because if you're going to measure inflation or define inflation by prices, right, which is a mistake. Inflation is money supply. It's a monetary phenomenon. The very word inflate literally means to expand.
Right.
Prices cannot expand. They can go up, they can go down, but they don't expand. What's expanding is money supply. Money supply expands with inflation, and it contracts with deflation. But if you're simply going to focus on prices for goods and services, what keeps prices in check? Production, supply. If things are more abundant, they're less expensive. So if you have a lot of stuff, then the price for stuff can come down. And so you have a lot of stuff when you have a strong, productive economy where people are working and they're producing things. That's what keeps a lid on prices. When prices go up is when you don't have a lot of stuff, when you have a shortage of things. Now when you have scarcity, price goes up as people bid for a scarce supply of goods.
Sure.
So when people aren't working, when people aren't productive, they're not making things, then what we do have is going to be more expensive. So that is really what happens. But the Keynesians don't think about reality. They live in this little fantasy. But the reason we had all the stagflation in the 1970s was it was the lag of the fiscal and monetary policy of the 1960s. And that was when we had the big Lyndon Johnson, Kennedy era, Great Society, war on poverty, Vietnam War, the moon missions. We spent money like crazy. They called it guns and butter, right? Butter because it was for peacetime, guns because of the war effort in Vietnam. But where'd the money come from? We borrowed it. We ran large deficits. We printed a lot of money. The result was we had to go up the gold standard. We didn't have to, but we did in 1971. And all the inflation, the inflationary chickens came home to roost, and we experienced that stagflation. Well, today, the fiscal excesses of the past are much bigger. I mean, what went on under Obama and even Bush and what is now going on under Trump, these deficits are much bigger than what we did under, Johnson, Kennedy, Nixon. The monetary policy today and what we've experienced under first Greenspan, but then, Bernanke, Yellen, now Powell, this is much worse than anything that was going on in the Fed of the 1960s and 1970s. So I think that we're going to get an even bigger dose of stagflation, meaning that the inflation is going to be higher and the economy is going to be weaker, more stagnation or recession and inflation. But the difference is we were a much sounder economy back then, and we could actually survive the cure. What was the cure? The cure was to allow short-term interest rates to rise to 20%. That's what happened under Volcker. And we had at that time the worst recession since the Great Depression. Now, the one we had in 08 ended up being worse statistically than that one.
Yeah.
But in order to stop inflation, interest rates had to get very high. Well, that can't happen now because we have so much more debt than we had then. And the character of the debt is different because on the federal level, a lot of the debt is T-bills. Back in 1980, the government's debt was financed over 30 years. And so when interest rates went up, it didn't impact the national debt. It only impacted the budget deficits of that year.
Yep.
But today, if we had interest rates, even they went to 10%, let's say, we'd have to spend 10% to finance the entire $21 trillion national debt, which is impossible because the government can't collect that kind of money. But it's not just the government that has all this. Corporations have short-term. You know, from real estate, how many people still have an adjustable rate mortgage or a home equity loan tied to LIBOR or Fed funds rate or the prime rate? So everybody is exposed. Everybody has more debt than ever before, and they have more interest rate risk than ever before. So if rates go up, everything collapses. That's why when the Federal Reserve, they just ran their stress tests, and they tried to come up with the worst possible economic scenario. There isn't a single scenario where they tested with rates going up.
Wow.
Either rates stayed the same or went down. And the other scenarios, inflation either stayed at 2% or went down to 1%. They don't bother to say what would happen to the banking system if inflation went up to 5% or 10%. They just want to assume that that's impossible, just like they, assumed it was impossible, before the 1970s. But we know the 70s happened. I mean, I know they happened. I mean, we lived through it. We were kids, but we were there.
Yep.
I mean, we remember the music, we remember the fashion, so it was there. And yet, for some reason, they don't think it's going to happen again. But it's the problem that you don't see coming that gets you, right? The generals always want to fight the last war. And the Fed and everybody thinks the next crisis is going to be exactly like the last crisis. It won't.
Right.
It's going to be very different, and it's going to be much worse.
Let's talk about trade wars and the tariffs and all of that. I know you've had some things to say about that. And, here's the president saying, hey, we're going to, put these tariffs on China and that's going to fix everything.
Yeah, we're going to kick ass, right?
Yeah.
I mean, and everybody is excited about it. You hear Wayne Allen Root yesterday? He's like, we're going to kick Italy's ass too. I didn't even know that, they had an ass that needed kicking. But we can't kick ass in a trade war. We're going to get our asses kicked because we have the most to lose because we derive the most short-term benefit from trade. Yes, we have a huge deficit, and in the long run, this is a huge problem. But the problem isn't the deficit. The problem is the U.S. economy that is resulting in the deficit. The deficit is the consequence of the problem, but obviously over time, these deficits pile up, and we are destroying our wealth. But the reason we have deficits is not because other countries out-negotiated prior inept presidents in trade deals.
Yeah.
Global tariffs are relatively low. I mean, they average probably under 2%.
Yeah.
So that's not it. The reason that we have huge trade deficits is because of our monetary fiscal policy. Monetary policy, interest rates too low. That means we don't have enough savings. Savings is why we don't have the capital investment. Our workers don't have the tools, the machinery. Also, our workers are not properly trained. We waste too much money keeping them in school and not enough money letting them learn on the job or learn a trade. And then we have a tax code and a regulatory code that makes American businesses less competitive than the businesses of companies and our trading partners. So we just can't compete. But in the short run, we derive two huge benefits from our trade deficits, right? Because Trump says, oh, we're losing all this money. Like, we just got the trade deficit today with China for last month. It was the biggest ever, right? Biggest surplus ever for China, biggest effort for us. And Trump is like, look, we're losing. They're killing us. We're bleeding, right? They're taking advantage of us. Well, what's actually happening? let's say the trade deficit with China, I forget the exact number, let's say it's $300 billion a year. Right? What does that mean? That means the Chinese are taking scarce resources that they have, land, labor, and capital, that could otherwise be used for something else. And they are using those resources to produce products to send to America. Real products. The clothes that we wear, right? The consumer electronics, the toys that our kids play with, right? All kinds of things are made in China that we don't even make here at all, right? And so they send us all this stuff, and we enjoy them. They make our lives better, right? So we get that. What do they get for that $300 billion deficit? They get dollars that we create out of thin air, and it costs us nothing to produce them. And they can't do anything with them except buy financial assets, right? So in the short run, we get all the good stuff, and they get a bunch of paper. So number one, that's keeping prices down, and it means we have more abundance, we have more goods on the shelves to buy. But number two, when they take those dollars and they recycle them, they buy U.S. treasuries, they buy corporate bonds. So the money comes back into our financial assets, and that keeps interest rates down. So because of these big trade deficits, consumer prices are lower than they would otherwise be, and we have more goods to choose from, and our interest rates are lower than they otherwise would be if we had to rely on our own savings. So to the extent that Trump is successful in reducing the trade deficit, that means Americans are going to have higher prices and higher interest rates, which means they're going to have a lower standard of living. Now, in the long run, this is probably something that has to happen. But it's not something that the president should be excited about and saying this is going to be great. He needs to be warning Americans about the short-term pain associated with this. But he's acting like we're just going to be the winners, that this is going to be great. We're going to make, we're going to get rid of these trade deficits, and we're just going to have all these jobs, and everything's going to be great. We are headed for a massive recession. The trade war is not going to be the cause of it. It will exacerbate it, but it will be the excuse that the Fed will be able to rely on to say, hey, this isn't our fault. Everything was great. We saved the economy, and Trump went with this crazy trade war that nobody could have anticipated, and now we've got to do more QE. We've got to cut rates, not because our monetary policy didn't work, but because this trade war undid all of our good work. And the Democrats are going to say, Trump inherited a great economy from Obama, and he destroyed it, not only with his trade war, but with his tax cuts and his deregulation, which he always talks about, but we didn't really deregulate. He said, we got rid of Obamacare. No, we didn't. It's still here. But he's pretending like it's gone, but it's still doing all the damage. In fact, it's even doing more damage. So all the people that so enthusiastically voted for Trump, they're going to enthusiastically vote for the next guy who promises something, and I think it's going to be a socialist. I think Bernie Sanders has already mainstreamed democratic socialism, which is just socialism with the word democratic in front of it, which doesn't make it any better, right? If a couple of people are going to get together and vote to steal your stuff, they're still stealing it, right? Just because they decided to have a vote on stealing it doesn't change the outcome for you. So I don't care how we become socialists. If we become socialists because we all vote for it, it's just as bad.
Hey, before we get you out of here, let's talk a little about gold and silver, because most of the metrics would tell us that the prices should be up, and yet mostly they've been down. What's happening in the metals?
Well, it's the flip side of all this optimism. When people are all optimistic, they're not buying gold, right? Gold is, I'm worried about stuff. I'm worried about inflation. I'm worried about the future. There's political uncertainty and geopolitical risk, and people might buy gold, but everybody is so excited that what's the point of buying gold, right? Stock market's booming. NASDAQ's at an all-time record high. Who cares about the trade war? Trump's making America great again. We're all going to get rich, right? And so nobody is worried. But that's when you should be worried. And the fact that so few people are worried, gold prices are cheap.
Yeah.
And I think $1,250 is cheap. It's not $300 the way it was in 2000, but those prices aren't coming back. But people paid $1,900 for gold in 2011, and we're in a lot worse shape than we were then. So I think gold is more valuable today than it was in 2011. Yet the prices are lower, and so people should be buying. I sell gold, or I help people buy gold. People can say, "Oh, you're trying to sell your gold." No, I'm not.
Right.
When people go to Schiff Gold and buy gold, they ain't buying my
They aren't
personal
taking your
supply.
gold, right.
No, I'm helping them buy gold from somebody else who's selling it.
Yes.
I'm the broker,
Right.
and we have a very low markup. So people should go to Schiff Gold and buy themselves some gold. They can also just open up an account at goldmoney.com and have some gold that they can use as a medium of exchange, carry it around in your wallet and spend it and get a free debit card.
Yeah.
So it's good to get into gold, but I think the real gains, if you really want to get rich, right? Gold is about staying rich.
Yes.
Just don't lose the purchasing power that you have. Because even if the price of gold goes to 2,000, 5,000, which I think it will, it's not going to be going up in a vacuum. The price of everything is going to be going up. I think gold prices will go up a little bit more than food prices, but food prices are going up. And so are clothing prices and everything that you're doing. So you're preserving your wealth. But if you really want to enhance your wealth, I think the gold mining stocks offer tremendous potential. If you're really bullish on gold, there's tremendous leverage. Those stocks are super cheap right now. I manage a gold fund, the Europe Pacific Gold Fund. EPGFX is the symbol, so that way you don't have to pick the stocks yourself. And in fact, it's managed by Adrian Day.
Yep.
I don't do it myself. He's here also at Freedom Fest. But Adrian's done a great job. We're the #1 gold fund according to Morningstar. Got a 5-star rating, #1 fund since we started 3 years ago.
Right.
And there's about 70 different funds out there, so he's done a great job. No guarantee he's going to keep doing a good job. You should read the prospectus before you invest. But if you think gold's going to go up, gold stocks are the way to go. Of course, if I'm wrong, you'll lose more money in gold stocks than you will in gold. But that's risk reward. It's all about the trade-off. But also, I do invest money for people just in non-gold assets. I just think people need to be out of the U.S., just get out of harm's way,
Right.
and buy assets in places like Singapore or Hong Kong or Switzerland or New Zealand or any place that I think safe ports in a storm, countries that are not nearly as screwed up, and where I think money is going to go when it flees the U.S. You have to figure it's not all going to go into gold. But when people become disillusioned with the U.S. story, when they want to get out, when we do have a socialist president who's jacking taxes through the roof, when we have this massive stagflationary economy, and portfolio managers are allocating away from the U.S. I mean, right now, if you look at global funds, right, where a global fund is different than an international fund, because an international fund has to invest outside the United States.
Right.
But global funds just can invest anywhere they want. But if you look at where they are now, they've never had this high an allocation to the U.S. So all the global managers are betting that the U.S. is the best place to be, right? Well, when they realize it's the worst place to be and they want to get money out of the U.S., they have to put it somewhere. I want to go to that somewhere first. I want to be in those countries, in those assets, when all that money starts to flow there. And you don't want to be in the U.S. stock market, right? Because then it's a stampede to get out. And if you actually look at the valuations, we have an emerging market fund too, but you look at emerging market stocks, they've never been this cheap in relation to the U.S. stocks. And a lot of that has to do with the perception of what the dollar is going to be doing, because a strong dollar hurts emerging markets, but a weak dollar is a huge benefit to emerging markets. So everybody is pricing in a strong dollar, and so they're selling off these stocks. But if they end up with a weak dollar instead, because we end up with an inflation, a recession that nobody sees coming, and then the Fed starts cutting rates when everybody expected them to hike rates, then these emerging markets are going to take off. But right now, they're super cheap because no one, that's how you make a lot of money investing, is by investing in something where nobody else is doing it, right? Like if you're at a racetrack and there's a horse that's 50-1, right? Why is it 50-1? Because no one's betting on it.
Right.
Now, chances are no one's betting on it because the horse doesn't have a chance. But if you know something about that horse that nobody else knows, right? And you know that horse actually can win this race. The fact that nobody else knows it, that's what gives you the 50-1. That's what gives you all the upside if you're right. Right? That's why the people who bet against the subprime market made so much money, because hardly anybody bet that way. They were all betting on the mortgages being good. So you've got all these people who are betting wrong now on the dollar, on gold, on the emerging markets. And so the payoff now to make the bet is enormous, because you're betting on a long shot that isn't a long shot. I mean, in my mind, it's a sure thing, but of course it's not, because there is no sure thing. But if you've got better information, because you've got better knowledge that everybody else doesn't have, that's your window of opportunity. Because if I'm right on this, the payoff, I think, is exponential relative to the downside. I mean, you can make 10 times, 20 times your money. You can't lose 10 times your money. I mean, you could lose all your money, but you can't lose it all 10 times over, right? So it's an asymmetric benefit.
Yeah.
But of course, you have to be willing to take a risk because you know if you're wrong, right? But this is where you have these huge payoffs. So this is why you want to really have a big bet.
Hey, if you want to find more about Euro Pacific Capital and what Peter and his company do, what's the best way for them to reach out?
Well, go to my website, europac.com, EUROPAC.com. Fill out, maybe put your name and phone number on there so we can get a hold of you, or just call us up. Our 800 number is on the website. I think it's 800-727-7922. Speak to one of my representatives about setting up an account, getting into my mutual funds, letting me manage your portfolio for you. We do a lot of separately managed accounts and also wrap accounts where I manage you in a portfolio of my mutual funds. You can also, again, buy gold from me at Schiff Gold. And I do a podcast of my own.
Yes, you do.
Peter Schiff podcast, Schiff Radio. You can go to schiffradio.com, my YouTube channel, or just, iTunes, Stitcher, any place that has podcasts, and check out my books. My most recent book is The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. It's still a few years old, but it's every bit as germane today as it was when I wrote it a few years ago. Even if you go back and read my first book, that's too just as important to read. Although now you can buy the revised edition in paperback. So,
right.
But that's been out for a while too. But there's a lot of good information there. So those books, you can get them at, I think, schiffbooks.com has them, but also, Amazon. We just put a link to Amazon.
All right, there's Peter Schiff. We appreciate your big brain, and thanks for sharing your thoughts with us today.
Yeah, and I'm looking forward to my birthday cruise next year on the Summit
Next
at
year's
Sea.
Investor Summit. Last 2 years, we've done the summit at Robert Kiyosaki's birthday. We thought, fair is fair. This year it's going to be, or next year it's going to be Peter Schiff's birthday. So birthday celebration aboard the 2019 Investor Summit at Sea.
Yeah, all right. It's going to be the first time that I'm not a year older when we go on the cruise.
That's right. You'll be a younger man, and by the time it's over,
I'll be older.
You'll be older. There you go. There's Peter Schiff. More when we come back from Freedom Fest in Las Vegas, Nevada. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
All aboard! Registration is now open for the Real Estate Guys 17th Annual Investors Summit. Imagine spending 9 days with like-minded investors, world-class educators, and real-world professionals. Returning in 2019 are sales legend Tom Hopkins, international developer Beth Clifford, authors of Prosper, Chris Martenson and Adam Taggart, and the author of The Creature from Jekyll Island, G. Edward Griffin. Also back is the editor of the Gold newsletter, Brian London, and Jim Rohn's 18-year business partner, Kyle Wilson. And joining us live and in person for his 7th Investor Summit in a row, Peter Schiff. Plus lots more to be announced. It all begins March 15th, 2019 in Fort Lauderdale, Florida. Visit realestateguysradio.com and click the tab that says Summit to learn more and reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys and an all-star faculty on the 17th Annual Investors Summit at Sea. Are you ready to profit in paradise? Hi, it's Robert Helms, and if you think real estate investing means tenants, toilets, and termites, think again. Located just a short plane ride from the U.S., a virtually untouched paradise awaits, the beautiful country of Belize. When you go to Belize with the Real Estate Guys, you'll spend 4 fabulous days discovering one of the most intriguing real estate markets I've ever seen. With its jungle rainforest, pristine beaches, and 81-degree turquoise water, Belize is one of the most beautiful places on earth. Belize property is on the rise, and many experts think the best is yet to come. But don't just take my word for it. Come experience Belize firsthand at our upcoming investor field trip. When you join us, you'll discover the many reasons we love Belize, like tremendously undervalued beachfront land, super low taxes, ease of doing business, and so much more. Get the details at realestateguysradio.com. Just click on Events. See paradise for yourself. Click Events at realestateguysradio.com, and I'll see you in beautiful Belize.
Hello, Robert Kiyosaki. Listen to the Real Estate Guys. They're wild and crazy, but they really know what they're talking about.
And welcome back to the Real Estate Guys radio program. We're in Las Vegas, Nevada for Freedom Fest, and it's been an amazing conference. We really can't cover the conference in a show or two, but we wanted to, have a chance to sit down with both Peter and Jim Rogers, and that's always extraordinary. But the conference is always worth coming to. It'll happen next summer. It's always in July, and you can stay tuned to the Real Estate Guys to learn about next year's conference. And big thanks to Mark Skousen for having us back here. But extraordinary to get around guys like Peter and Jim. They just have a different way of looking at the world.
Well, and I'll tell you, if you're listening to this and you listen to those interviews and you hear some of the things they talk about, and these concepts are the very first time you've heard them, and maybe you're a little lost, maybe it's a little over your head. I remember those days. It took me a long, long time to learn how to speak economics and understand that at the level these guys talk. It's one of the reasons we produce the Future of Money and Wealth video series, because, we have these conferences, we have these wonderful speakers, and a few hundred people in the room get a chance to enjoy it, and the thousands and thousands of people that are out there in our audience don't. We thought, you know what? Let's go ahead and record this thing, and let's make the whole thing available. So we did that. It's 20 videos. It's over 14 hours of content, presentations, panels from people like Robert Kiyosaki, Peter Schiff, Doug Duncan, Chris Martenson, Simon Black, G. Edward Griffin. I mean, the list goes on. And one of the things I think that we did that was so great is that after all these macro thinkers got up there and talked about, gold and currency and what's going on in the economic system and the Fed and geopolitics and all that stuff, then we put a bunch of just street investors, people who are out there grinding it out every day in the real world, making investment decisions in real estate, people like Brad Sumrock and Gene Garino and Kathy Fedke. We put them up there and we said, now that you've heard all this, how does this change what you're doing? Does it change what you're doing? Are you more optimistic? Are you less optimistic? What do you think? And so that, I think, was just alone worth the price of admission. Anyway, if you're out there and you're interested in this, we've got it available to you. Just send an email to future@realestateguysradio.com. That's future@realestateguysradio.com. We'll tell you how you can get your hands on the Future of Money and Wealth video series.
So our message to be optimistic and look at the positive, and we're real estate guys, but that's why every now and then we have to take time out from being real estate guys and listen to the broader picture economics and some of the voices that have the experience, like Jim Rogers, a guy that's been successfully investing for dozens of years and has a pretty amazing track record. Peter Schiff, who is one of the smartest and most articulate guys we know. And we've got to get our minds around both sides of the coin. So big thanks to Peter and Jim for being on the program, to Mark Skousen for having us. Next week, we'll talk about a really cool part of real estate that we don't talk about too much, and that's retail real estate. We've got a great guest for you. It's going to be an awesome show. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.